The world is already close to hyperinflation. So far it's around 5%, but that's an uncertain inflation rate. We are still in the early days and this 5% inflation is expected to increase. This can be known after economic tightening. Warren Buffett claims that the coming economic crisis will shake the world. I think inflation will be close to 6% without risk. As a result, the Federal Reserve System will raise the short-term interest rate to this level. This interest is very harmful because it causes a lot of damage to the economy. But what the Federal Reserve is trying to do is balance an interest rate that is high enough for the lender but not too high for the borrower. And so I think after these measures the growth rate will slow down, but still probably a little over 5%. This in turn will affect all markets and negatively impact stocks. Because as interest rates rise, so does competition. And then big difficulties begin to arise. And the government should take it upon itself to regulate these interest rates. We can clearly see an example of this in the 1930s under Franklin Roosevelt. The state was able to get out of the crisis by activating the regulatory function. As the crisis deepens, people will turn to banks less and take less credit. Banks that get high income from loans will come out of this business with a loss. As a result, a number of weak banks will have to sell their shares or go bankrupt. Because they will no longer have enough income to live on. As for market prices, let me note that there will be a sharp drop in inflation rates. Some inflationary factors, such as oil prices, will not remain where they are, and we can already see this in some commodity prices. We also see this in housing prices. So it will bring inflation down a little bit, but it's bringing it down to a lower level than numbers in the vicinity of 8%, which doesn't satisfy the wage sector. The employment sector is doing relatively well, as the unemployment rate is low. So there is still demand. And the inflation we see comes from compensation, inflation. Therefore, we will see that these rates should increase. We see a decrease in interest rates and a decrease in the inflation flow embedded in the curve. And I believe you will find that the ratio remains higher than the levels embedded in it. You know there is a lot of demand for money, but we need money to reduce poverty, build infrastructure, repair Ukraine, spend money on climate change. We no longer have the mentality that an individual can have. How much money do we have and what should we spend it on? The major difference between individual bulls and governments is that governments do not have this restriction as they can print money. So I think historically when we do this trade, when you have a lot of debt and a lot of financial assets, it becomes very difficult to balance them, and now we are in a shift. In the previous decade we had falling interest rates, which was good for bondholders, and cash was very cheap, almost free. Therefore, the entire investment climate is built around this. We are now removing this setting. In other words, central banks are trying to balance growth and inflation, and this creates a difficult balance, stagflation environment. I think this will be the case in the long run. Be careful. Look at your returns in terms of inflation, no matter which country you live in, no matter what currency you work with, look at your returns according to inflation. People don't pay enough attention to inflation. They only look at the level of return. At such times, you should stay out of debt. Have a well-diversified portfolio. Because if you do it well, you reduce risk without lowering expected returns. Also, don't be too tactical. I think you have to understand that markets are a zero-sum game and it's harder not to compete because there are a lot of people trying to do it and taking money from others. So have a strategy. Over a long period of time. You know, you need to save money in a diversified portfolio of assets. So these are the most important things at times like these. I need to go back and find out what the conditions are like today and find out what people, governments, companies are doing. You will see cycles going back 500 to 600 years on that scale. Cycles are not predetermined by the cycle, except that there are mechanical cause and effect connections. And if we look at the financial issues, you're pretty sure that the size of the wealth gap, we talked about printing money, has grown to the size of political gaps with populism and the like. And if you look at external factors, conflicts between countries, military buildup, and the like, you go back in time, each at their highest level since 1930-45, and they are all interrelated. That is, less in times of peace, greater conflict periods. And we are in this age. When you look at the geopolitical in India, it's true, we're all in the middle of it, big countries and many small countries. So we no longer see small country conflicts, we see something like the US and Afghanistan or Iraq, and now Russia and China. I think there are 5 kinds of wars. There is a trade war, a technology war, a geopolitical war for influence, a capital and economic war, and a military war. We are in it all. If we never engage in a military war, we will still suffer. Because we are still in an environment where globalization as we know it has regressed. Because right now there is a desire to be self-sufficient in the fears of those wars. In the past, the world produced products where they were most productive. This is changing now. The world is changing rapidly now. And now it's where it's safest. In other words, we see that the change in the global economy is largely due to these geopolitical changes, and you may find ourselves in a military war. I'm not saying it's inevitable. You should know that there is currently no United Nations, World Court to settle disputes. These problems then affect countries differently. It is certain that those who participated in the war had more problems than those who did not. The warring state suffers a lot. However, the war between Ukraine and Russia caused inflation not only within itself but also all over the world. Impartiality is important. It ensures the development of neutrality and offers a trouble-free life. When I look at countries, there are questions that come to my mind. For example, do they earn more financially than they spend? Do they have a good income and a good balance sheet? Second, are people within the country engaged in harmonious, effective, healthy but destructive political dysfunctional behaviors? Third, are they at risk of an international war or are they more neutral about staying out of international war? If these 3 are financially sound, work well with each other, operate with minimal risk of direct intervention, and are more neutral, then I think these countries are better off. Throughout history, there have always been inflations and wars. Only the wise have successfully survived these difficult times. Yes, it is a difficult period, but we can it.